Welcome to Insights. I'm Eric. Thanks for stopping by to watch today's update. We're going to talk about the matrix in general. I want to make a few comments. We're going to take a look at some of the resets that are taking place today and what's going on. It's not going to be a detailed one. I think I'm going to take a look at the U.S. dollar index and the foreign exchange at some point, individual reviews, but that's something we're going to take care of a little bit later. It's just a reminder to everyone, and not only for this year, but also for next year. The matrix key or access key, which is going to be consolidated for next year, there's only going to be one, opens up all content with the exception of reports. So if you're looking at a review or if you want to access the matrix, you use your subscription or your access key. And eventually, if we include the corporate matrix or the company matrix within this as well, it will open that too and it'll be included inside the matrix. The reports are all located on the report page. They're separate, they're far more advanced in detail. You can find it on the menu bar, and then you buy an individual report key for that report. And reports are ongoing. They get updated until the evolution of the trade changes significantly, and then I take down the report, and then we probably start a new one. The reports are really a way of looking not only in detail within the matrix that every subscriber gets. You have access to mine as well as additional database and additional analysis. It's reports are how I look at markets. They're very detailed. They're very time consuming in terms of long-term cycles and of price and time, particularly time, as well as intermarket flows, which are an important part of studying markets. If we look at the matrix update through today, you can see the numbers here. These numbers here represent the time of which the matrix was updated. So it's 12:22, and this is the time of which energy is updated. Energy is always delayed relative to the price. Energy is normally updated on Fridays, and it's already 3 days delayed from Friday. But I think this Friday is going to get pushed off into next week. So this is an idea. This gives you a time frame of whether the DI has been updated, and this gives you the time of which all price and time, everything that's calculated inside the matrix. This is the timestamp. So keep an eye on that when you're studying it or you're saving these. If you save these on a daily or weekly basis, it's important that you don't have overlap. Sometimes the uploads fail into the cloud. Happens every so often. And then the computer usually reminds me, and if not, everyone else who subscribes to the matrix jumps on board. It is something that does happen. The computers make mistakes or they do crash. Then we had a crash yesterday, but we usually resolve them pretty quickly. So that's something that you want to keep an eye on. And these metrics right here are, well, I don't know how useful they are. Maybe they're irritating because you didn't play the 36 primary uptrends that have produced a 60% return in the top five and in the top 20. The average mean is 48 of everything inside the matrix. Obviously, there's 45 markets that we track. But really the winning percentage is pretty decent, and the losers, there's 8 of them, have an average loss of 2%. So I don't find too many people who can beat the matrix. The internet's full of a lot of big talk, but no one that I know can produce like this consistently and apply the same type of analysis from one market to the next. I think it's the key to this, the key to the evolution of the trade, which I would click this link and study the 4 phases in detail. That's how we do things. We're looking for green flips here, flips either up or down, and then we take them off the table or we put them on the table. These are all things that we're interested in. The first phase is a nibble. It's a large energy build against, but you actually have to have a primary trend decline. These would be candidates for nibbles right here. I'm not sure wheat, primary decline too, but you would have to have a really sharp bearish energy build, and these two don't have that to begin with. And you would have to study and use the pro charts to do that. And stuff that I talk about, I usually help people walk through that. And in general, after the flips take place in the green entry, shorts, longs, the resets come, which is a long phase. It's phase three can last for years. As you can see, many of these, this primary trend is counted in months, and anything above 12 is greater than a year. So you make money by following the primary trend, and then within that you get resets, and that's what we're talking about here today. It's all these yellow coatings. You can see them here, R in the column. You have copper resetting. You have the Dow Industrials. You have the S&P 500. The difference between the three of them is as the computer flags copper as early. I can go and do an individual review on copper itself, but this setup looks pretty good. We'd have to take a look at the energy build in itself, but if you were going to chase a reset, copper is a much better triple up than the two stock indices, even though they're showing high compression. These are still, Dow Industrial is fairly low comparison to the S&P 500, and you can clearly see that the NASDAQ 100 and Russell 2000 are lagging the other two indices, and it's probably because the Dow Industrial is located with more or populated with more industrial names, and this plays out down below here as the leadership is starting to shift again. NASDAQ 100's been leading, but this number is it's falling, and eventually, if this continues up, the industrials will catch up and will take over the leadership shorter term. You can also see flips in progress by anything that's highlighted yellow, and we can see that the Canadian dollar is a flip in progress down. I'm sure that's not something that everybody who's in favor of higher commodity prices wants to see. The clean sweep on the foreign exchange across the board. We've talked about this in reviews. You got the dollar index up and every major currency against it in a down phase. And I'm sure everyone's going to tell me how bullish that is and how the dollar is going to collapse. But again, then there's a ton of work to be done. So all we do is track the invisible hand. And all I say to that is, and well, then show it to me. If you can't show it to me inside the matrix, then you're fabricating it based on your own perceptions and influences. Perhaps this is an inflection point, but if it's not, it's the first inflection point that's after 4 months. You're making a low probability bet, I warn you, but then again, it doesn't really matter. People tell me I'm full of shit all the time when I see all this stuff. So I just point up here and say, can you beat that? And chances are you cannot. So that's what the matrix is really all about. We are talking about copper industrials and the S&P 500. I would lean towards copper, and it jives with a lot of the commodity setups that we're seeing. And anyone who's following corn and soybeans and wheat probably know what we're talking about. We've done some reviews on that, and I will likely do some updates. The last part that I've often talked about is the timing of correction, and this has been added recently. This helps us time a correction. Any percentages 50% or higher are early warning, but that doesn't mean it's over. It just means that the percentages, the probabilities for continuation of the rally are getting more and more dangerous. Of course, then people tell you that you're full of it as well, because this number continues to climb above 50. I've seen as high as 70, and people are ragingly bullish. And then the steamroller comes in and clips them down, and then it's over. And that's why I wouldn't even listen to me. I'd follow this stuff right here. If you're a subscriber, load into this and check it out. I mean, if these two boxes get checked and you're having a bullish conversation about the equity market, well, it's up to you, but you're going to get killed. And that's, well, not killed. You're just going to lose some money, and you're going to lose some reputation. And apparently, reputations don't matter, I guess, because you just quickly reverse your stance on the internet. No one has a memory, and then everyone loves you anyway. So it's, or hates you. I mean, the internet is a bizarre backdrop. It's the worst backdrop I could ever see in terms of trading stocks. It doesn't quiet the mind. It introduces emotion, and it does all those sorts of things that you're trying to avoid. And that's why the matrix was developed. But this is what we're dealing with. These are some of the updates that are coming forward. Some of the things that I focus on with my matrix. I have several versions. Here's one of them. These are the intermarket trends that we follow. Some of the things that we look at. You can see that we're risk on crude, risk on crypto, things of that nature. These are the things that get introduced when I generate reports. There's also long-term cycles and databases. They're not even tapped here. What we have introduced, though, and towards the end of the year is the lead D, lead W tabs. We've always had the lead M. Lead M describes, all these tabs describe the impulses that are in the databases. So you can see what it takes to flip one of these trends to down and up. If there's a lot of information here, if you need some help, let me know. Contact us. Other than that, I think following the matrix over the time, over the last decade or so, has been the thing to do. Organizing the information is probably the most important, but keep an eye on this stuff, and I'll continue to work on and polishing up the finishing code that generates all this stuff. It's getting far more stable now, and we're having less problems with it. But that's really where we stand. The equity markets are resetting up. They're mid-cycle. It's not a great thing to jump in. It's probably more preferable to go into the Dow Industrials than it is the S&P 500. But it's again, it's something that I wouldn't completely blindly mess with always, because the crash percentage is already up to 50%. It ain't going to take much to jump this up to 60%. But then again, we have talked about why the stock market is doing the things it's doing in terms of the economy, and I've mentioned it quickly here. The economy is measured down in here. The economy is still up, but it's starting to dip and it's starting to weaken. You see, it's transitioning down. Yet the stock market continues to go up, and that's why I offered the economic and U.S. stock report for $50 until the end of the year. There's a couple videos and a series of videos explaining a lot of things that are going. I suggest people go into the reports tab and check that out, unless you want to just join the conversation or the narratives or the spin masters that are out on the internet. And there's a lot of them, and you can get many of them off of Bloomberg and Yahoo and all, Yahoo.com finance and probably Facebook. It doesn't explain the world. The world is much different than people realize. That's the whole point of the matrix. So thanks for watching today's review and update, and I hope everything else it was working pretty well with you. If not, you contact us, and I hope we'll see you again in 2022.